Hey, good afternoon, everybody. How's it hanging? How's it hanging? Happy New Year. Happy New Year, everybody. All right. Cool. Let's jump in. First afternoon meeting for me in a while. We didn't do any last week. Happy to be doing it again. I hope everybody had a great long weekend and a happy New Year. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Whatever. Anyway, there's my position disclosure. So position disclosure, I got stopped out of AMD and Neo, which I had for momentum trades last week because I wanted to see if this market could kind of go parabolic, even though I really didn't like the idea of new longs in those spots. It was just a pure momentum trade. NVIDIA is really the same trade, and I very, very, very nearly got stopped out of NVIDIA today, and I was going to liquidate the position if it closed under 480, but then we had this kind of face-ripping rally into the close, and NVIDIA was actually relatively strong in the afternoon, so it never broke its opening low, which is what would have pushed me out and stopped me out. So I still have NVIDIA by the skin of my teeth at this point, but we'll see how that one plays out. I'm not overly optimistic on it. It shouldn't have pulled back as deep as it did. SPY here, intraday chart. I really want to talk more about the big picture, but intraday we gapped down really big. Spent a lot of time in the beginning of the day kind of digesting that gap down. ADMA caught up, tried to push us lower. SPYs didn't really break too hard. They pushed through the opening low by a little bit and then snapped back up. And then we had a pretty weak afternoon session, which was different than a lot of what we've seen last year. And then when MOCs hit, the MOC was pretty big to the buy side. I don't remember exactly what the number was that Pat said, 7 billion to buy or something. It's pretty significant. So we ripped here in the last 10-15 minutes of the day off of that. And Qs are a similar situation, though very relatively weak all day. And the IWM actually had a lot of relative strength during the day, but weakened out a little bit in the afternoon session. So at the end of the day here, the SPYs are down 0.56%. The Qs are down 1.65%, so pretty brutal from the Qs. IWM is down 0.5%, but I actually want to also take a look at things I don't look at too often. The Dow, which closed up, 20 cents, basically flat, but not bad on a day when parts of the market were getting smoked. And RSP, if that's a correct print. I thought RSP actually closed negative. Maybe I'm wrong. RSP, I guess, closed flat with the SPY down 0.5%. Or we can look at QQQE, the equal weighted NASDAQ, which I'm also seeing here is flat. I thought it was down a little bit, but still, if this is correct, equal weighted Qs were flat. I don't think that's right. Yeah, there we go. Down 1.3%, with the Qs down 1.65%. So definitely the selling, especially in the beginning of the day, was very concentrated in these big cap tech stocks, which I guess shouldn't be overly surprising. It took me, why is SoFi moving? Trading down 25 more cents or so here after hours. Yeah, so it took me a little bit by surprise, just the degree of the selling this morning. I guess I shouldn't be overly surprised. We have been talking for 2 weeks now about how the stocks had performed best last year. No one wants to sell them. No one wants to take a tax loss. No one wants to realize a tax gain on it. So if people were actually looking to do some selling in the best performers, it makes sense that selling would come in in the new year. Though it was a lot of selling for the first day of the year. Probably was no help that Apple had this solid downgrade this morning to underweight, which hit that stock pretty hard. But it was a real bloodbath for the Magnificent Seven very early on. But yeah, going back to the daily chart of the market, which is where I really kind of want to start. We had discussed at the end of last week from a momentum perspective. From a momentum perspective, if we were really going to go parabolic on the upside, we probably should never be able to lose SPY 475. And the same level for the Qs that we were looking at was 410. And the same level for the IWM was actually a little bit deeper down because the IWM had so much of a bigger move. That same level for the IWM for me was $200. So this morning we had a large gap down and we were below those momentum levels pretty much right away. Just, trading briefly below a level is not the end of the world. If you see, like Friday, we tailed below 475 in the SPYs, but closed above it, so not necessarily the end of the world. It's when you get below a level and hold below a level that it starts to confirm it. And that's actually what happened with the markets today. We didn't just gap down below those key momentum levels, we gapped down and held below. But at a certain point, the market is still in an uptrend, and the question goes from are we going to see a momentum move to should we be looking for a higher low in the market for trend continuation? And the interesting thing for me, at least for the way that I'm trading right now, is at the same time as I'm getting stopped out of some of these trades that I had on as pure momentum trades. And AMD I got stopped out of today below 140, gave this thing back $12 or whatever from highs. Which is unfortunate, but still was a position that I was able to make money in as an example. NEO, we had this really big move a few days ago. This is another one where I was looking for momentum. My stop loss on this was supposed to be $8.83 is what I was using there. Followed my 15-minute rule, so I ended up losing even a little bit more than that on the position. But basically I'm getting stopped out of the trades that I have on where I'm looking for that momentum continuation. But at the same time, the market is actually dipping into this broader equilibrium area, which means for the first time for some of these other positions that I haven't been in, I'm willing to start to nibble a little bit. Because this market is still innocent until proven guilty. The trend is still higher. Even though we lost a couple momentum support levels, we haven't lost any major support levels. We haven't created a reversal pattern anywhere. There's no lower high, lower low. There's no reversal. There's nothing. This is just a pullback into equilibrium. And technically, pullbacks into equilibrium in a bull market are something that are to be bought. With that said, the message that I was trying to get across in the morning meeting was that, okay, we're gapping down to 472 or so. The lower band of equilibrium is the 21 EMA 467.80 or so. You could trade down to 468. You could even pierce 468, trade down to 465, create a pivot there and still be healthy. So whereas the momentum trade seems like is a failure, it's lost, the idea is not working, the buy the dip trade is still here. It's just a matter of getting the signal, not being too early, or if you want to be a little bit early, potentially making sure that your sizing is appropriate to be able to do that. So that was kind of my approach today is, okay, I had this idea the last couple of weeks. I wanted to see if we could get momentum to come into the market. I had mixed results with it, to be totally honest. So I'm getting stopped out of these momentum trades because the market's showing me that the momentum is failing. But at the same time, we're finally getting down into this equilibrium area a little bit deeper where maybe I can nibble in a small way on some of the positions that I had been heavy in but fully liquidated into this up move just because the up move had been so dramatic. So that's kind of what I did. I have a little bit of path now, which I haven't really had too much path since the earnings report, and I fully liquidated into that up move. I'm finally back into a little bit of snap on this dip here. I'm finally back into a little bit of S on this dip. I finally am back into a little bit of BYON on this dip. These are all positions that I fully liquidated. And again, I'm not going, maximum size here because I recognize that even if the market's going to maintain its upward bull trend that it's been in, you could pull back to 465. And if you're loading the boat at 472 and there's another $7 that has to come into the downside before a real pivot low actually comes in, you'll potentially be eating so much pain that you won't be able to hold the positions or afford to hold the positions for when the pivot comes in, let alone actually add when the pivot comes in. So that was really my game plan for today. It was okay. The momentum trade is showing me that the idea was wrong. So I got to get out of the way on those trades. And on those trades, I did have a lot of size, but the plan was to keep them relatively tight. Whereas some of these other trades that, are more these dip buying type of trades, willing to give a lot more spacing to, but I'm going to start very slowly into this dip while waiting for a signal, recognizing this is really just the first down day, and being able to kind of build into them a little bit further. So that's kind of where the thought process is. At the end of the day here, the SPYs gave a doji in equilibrium. It's not like we didn't close at highs where you can feel really confident that this is the pivot low and we're going to immediately work our way up. But it's an interesting spot for the market to see if it can find its footing again. And the Qs were super relatively weak, retested $400, which might be a little bit of a psychological level, actually pierced the lower band of equilibrium, that 21 EMA, which just shows you, how much selling there was at a certain point in some of these names. So that's finally at a spot where maybe you can feel a little bit more confident doing some small buying in certain things. I still don't actually have any FANG names on. I guess except you could say NVIDIA. NVIDIA is still a momentum trade for me, but as far as I did really well with Apple and Amazon and Google on the way up. I have not gotten back into those because of the relative weakness that's there. Though we did have a really good call out in Amazon at this low. There were some good call outs today intraday. It was actually a good trading session because you had things that were trading really weak that you could take advantage of. You had things that were trading really strong that you could take advantage of. There was some mean reversion. I remember specifically saying, because I was still on the radio at that time, I actually like this Amazon pushing through new lows but not actually giving any continuation and snapping right back up, and you could maybe go long versus this low. That trade worked out really well for anybody that took it. I was not involved. I was just still kind of managing everything else that I had open. But the point is, I guess there were good trades on both sides of the market. Palantir, we talked about a potential short versus 17 for the breakaway gap to the downside because this is just a huge support level here. Huge support level, and you're gapping below support. It's a breakaway gap. So that actually worked out as a good short trade for anyone that hit it early off the open. I'm actually long, but my trade's a little bit different. It's a little bit bigger picture, and I've been in this thing for a long while and done really well with it. So yeah, I guess that's pretty much it. Definitely a little bit of a character change in the market today. We didn't get that afternoon roll-up that had become so common last year. First day of a new year, so there might be, the question always is when we're looking at different pieces of kind of positioning data or forced buying or forced selling that, can that be overwhelmed by other flows, and in this case the answer to that was definitely yes. But I think the jury's still out right now on if 2024 here just brought us a completely new character change to this market, similar to what I was saying in the morning meeting about the first day of January 2022, which is the all-time high for the SPYs, or if it's just, hey, first day of the year, we're going to have some rotation today. We're going to have some weakness in some of these FANG names because we need to take some money off the table now that we have the new year that's come into play, and then it's going to be business as usual. I really don't know. So stay tuned. So yeah, I guess that's really all I got. So I'm happy to take a look at whatever you guys have as far as questions go. So I guess SoFi got downgraded. Varun asking about Hawaiian Electric, HE. Did news come out on this HE today, or was it just because utilities were strong because it's a safety play? Yeah, XLU. So what did we have for leaders today? XLU up 1.1%. How did XLE end up closing? XLE up 1.2%. Energy, very strong. XLV was a monster day. XLV up 1.75%. You saw names like Moderna, just super, super strong today. Moderna's up 13.3%. XBI, biotech ETF, up 1.2%. So there were definitely some pockets of real rotation out there with some real strength. At the same time, you saw Apple get hit 3.6% today on a downgrade. You saw semiconductors get absolutely walloped. AMD's down almost 6%. It was just super nasty that this thing was able to break out through 140 early last week, basically give a monster momentum $12 move just to 100% retrace it all the way down. NVIDIA, which had been relatively weak last week, in some ways held up better than AMD today, only down 2.9%. Netflix down 3.8%, got totally smoked. So I think that this HE, I mean, you have a nice technical breakout in HE, but I think that this is just a benefactor of the rotation, and I don't think that there was anything new in HE. There was just a real rotation to kind of value today. And this thing broke out through resistance that was at $14.60. I have not been following the Hawaiian Electric saga since the initial big gap down with the fires that were taking place out there. So I really don't know what's going on with this company fundamentally at this point. But it was a nice little technical breakout in HE today off the back of relative strength from utilities. Can we talk about Netflix? Netflix 465. Okay, low of the day today. Low of the day is 461.86. I mean, I think that the direct answer to your question, though, depends on the market, to be honest. It seems like streaming names were particularly weak today. Well, let me look at these other more garbage ones. What did Paramount do? Down 2.5%. What did HBO Max do? Warner Brothers. Warner Brothers is actually positive today for some reason. WBD Green. We saw a headline this morning that there are a lot of people, I guess, canceling subscriptions, which is something I had a lot of driving that I did this last weekend, so it's something that I was even floating with my wife about. It's like, why are we paying for every streaming service that exists? Why don't we just pay for like one a month when there's a show that we want to be watching on that? And we'll watch like all the Netflix shows that we want to watch. And I'm not a huge TV watcher, but I do like to watch a little bit of TV before bed. But like, why don't we just buy Netflix for the month of January, or watch all the Netflix shows that we want to watch, and then drop it, and then buy, I don't know, HBO for February and watch the HBO shows that we want to watch, just kind of binge them and then drop it and do it that way and save some money instead of doing all 10 of them at the same time or whatever. So it seems like maybe that's actually becoming a little bit of a trend. So that data came out, which I kind of thought was old news, but created more relative weakness out of Netflix. But Netflix, if you want streaming, I mean, Netflix is the one. Netflix is the one. They ate everybody else's lunch, as far as I'm concerned. They're the one that makes money. I think Hulu makes money also, which is Disney at this point. But Disney Plus obviously just burns cash. We'll see if they get combined at some point. There probably needs to be more consolidation in the streaming industry in order to make these companies more profitable. But anyway, the bottom line, the answer to your question is, I really think that, buying Netflix calls depends on what the market's going to do. So is the market, going to just hold this equilibrium area and work its way back up, or is January indicating some sort of change? For me, for the moment, I still say the trend is my friend. This is just like, the interesting thing, and it was almost a complaint about the massive November-December rally, is that it didn't really give a lot of stair-stepping higher high and higher low trading setups. We got a lot more of that in the May, June, July rally than we had in this November, December rally, which for large periods of it was just straight up. And then we had a couple bull flags that broke out that maybe gave a little bit of opportunity. But more traditionally in an uptrend, you want to be lightening up when the market gets extended and then looking for signals in the equilibrium area to buy back that stock. So for the most part, that's the environment that we're still in. There's no indication here that one down trading session is going to create a trend reversal. So in that case, for the moment, I like the idea of buying dips, and that could include Netflix. From Cameron, during the past few months, I have been trading much more on the long side. I hope so. Given the context of the market, probably 80% long, 20% short. Do you have any advice on adjusting this as we move into the new year? Should I continue to be long bias until there is a clear trend change, or move to a more neutral view? Yeah, so I mean that's generally the way that I operate, Cameron, is the trend is my friend. So I'm interested in buying breakouts. I'm interested in buying dips until the market changes. When do I want to maybe focus a little bit more on the short side or focus less on the long side? In periods where the market's getting extremely extended to the upside, in which case it's just a bad risk reward to do any new longs. And at a certain point, our extension rules come into play where we know that coming in the other way counter trend becomes a much higher probability, better risk reward trade. So that's one time. Or the other time is when that trend actually shows that it's failing or reversing or ending. And like I was just saying, for the moment at least, there's no indication of that. So I would still prefer to utilize these down moves as dip buying opportunities than the other way around. But that's not to say that you can't take pain to the long side in an uptrending market. And I know that November, December is not the best example because we were basically straight up. But if you look at the uptrend that was that May, June, July period, like look at this pullback here. We got extremely extended, granted, by June 15th, probably $10 plus away from the ADMA on the daily. And we had a pullback from 443.60 all the way down to 431.20. So that's, what did I just say? 444, let's just call it, down to 431. So it's like a $13 pullback. So if you start buying without a signal or anything like that on the way down because you're saying, hey, this is an uptrend, so I should just be constantly buying, you could have hurt yourself and done some damage to yourself over the course of this week plus pullback that we had in there. And that's exactly why I'm emphasizing into this pullback. The trend is still my friend. I would still rather be long than short. But I either need a very specific technical signal to size up into the dip, which I haven't gotten, or I need to start small and be willing to build in and kind of let it come to me, recognizing that maybe the higher low just happens at 472 and that's it, but maybe it happens as deep as 465 over the course of a multi-day period of weakness. So yeah, that's how I'm approaching things for now. For Rex, question regarding game planning. I took AMD long. Oops. Give me 1 second. What was I talking about? Oh, Rex's question. Question regarding game planning. I took AMD long on 12/26. Nice. It's the breakout day. Beautiful. After my 1-to-1 covered, I was planning to sell 50% of my position at 160-ish. I sold 10% around 150 due to the extension. Then this morning, AMD gapped down, turned into relative weakness, and kept selling along with the market. My question is, should I be less greedy on my profit taking, knowing that AMD was up 4 weeks straight on the weekly chart? I turned out basically to make nothing on AMD. Um, I don't think that you did anything wrong. I think that you had a game plan that was extremely aggressive, but you created that game plan. You created that game plan for a reason, and you went after it. So I don't think that you did anything wrong. The question is, was the game plan appropriate? And I would say yes. I know that that's what I was looking to do with my momentum trades. The idea behind my momentum trades, for me, this was my game plan for how I wanted to trade, AMD and especially Nvidia and Neo to some degree, was to be extremely greedy with them. I wanted to see if this market would go parabolic and give huge momentum. So my thought process for my own game plan, which was similar to yours, was I'm all or nothing. I either want to make a boatload of money on these trades, or I want to make nothing slash take a loss. And that was my game plan. And I would not personally go back and change it for a second. I had a specific theory, thought process for the market that we might be able to really go parabolic on the upside. If that happened, AMD, Nvidia could be leaders, and I'm just going to be, massively greedy with it and see what I can do. Um, so that's what I did, and it didn't work out. And I was up a lot of money in AMD, and I finished up a small amount in it, honestly, after getting stopped out. And that's only because AMD was my less greedy game plan, actually. Nvidia, and my based on my rules, it actually traded past where I wanted to stop myself out in Nvidia, but I didn't get stopped out because of my rules on how I stop myself out of positions. If I get stopped out, I'm planning on using today's low as my stop loss. If I get stopped out of Nvidia, I'm going to take a pretty nice loss on it. I'm gonna take a pretty nice loss on it, but it's something that I wouldn't change, because I was trying to put myself in the position based on my game plan to make a massive amount of money in it. I easily could have traded Nvidia in such a way here where I would close out on the position unchanged, no gain, no loss on a failed trade, and that's not what I'm gonna do. Um, the vast majority of the time when I trade more conservatively. I don't use the super, super, super greedy game plan like what you're describing with AMD or what I was doing with NVIDIA. I get my risk covered. I make more money. I sell more on the way up incrementally. I buy it back. I work ranges. Eventually, when I get stopped out, I get stopped out. And, a lot of times it's a failed trade where I make money, and that's what I love. Those are the game plans that I'm usually looking to implement most of the time. But I had a specific game plan here with these trades based on a specific thought process, and if that doesn't work out, then I need to be fine with the fact that I created a super greedy game plan for myself. And again, even though the idea has now basically proven to have failed, I would not go back and change what I did at all. Um, I'll be happy to take my loss in NVIDIA if I get stopped out tomorrow. I'm happy to give back almost everything I made in AMD on a relative basis. I'm happy to give back everything I made in Neo. It was a specific trade with a specific game plan. So that's my feedback for you there, Rex. I hope that helps. Appreciate the question. Shooting over to YouTube. Happy New Year, Steve Austin. What's up, Robert? Happy New Year to you as well. What is your big picture prediction for 24 year with market and individual? Oh, for the year 2024 with the market and individual sectors. Thanks. Well, appreciate the question, Robert. I'm very happy to not have CNBC on today. Now that I'm out of New York, I probably won't see CNBC until next June when I'm back in the office and Josh shows up and turns CNBC on. Because I especially can't stand the beginning of the year when they basically go from person to person and say, hey, can you give me your end of the year S&P prediction? Where do you think we're going to close the S&P at the end of the year? The fact of the matter is I have absolutely no idea where they will close the S&P at the end of the year. If anyone ever asks me that question, I just always say flat because it's the most boring answer possible. How many people get on CNBC when they get asked that question and say flat? I think we'll be at the exactly where we started. No one says that because that's not the purpose of CNBC. The purpose of CNBC is to entertain. So you're going to get people that give their big bull case, their big bear case, give a big upside number, a big downside number. No one ever says that the market will be flat. You know what? I think the market will be flat. That's what I like to say, and I say that every year. So I don't really have any very big picture thought processes for you. At this point, I kind of take it day by day, week by week, and month by month. I still am looking for some sort of deeper correction to happen in the beginning portion of this year. I didn't think it was going to happen starting on January 1st. Maybe it is. I don't know. I also still am of the opinion, though, to some degree, that we're going to actually stay range bound. There's been a lot of chatter over the course of the last 2 years now that we're in a bear market, we're in a bull market, we had a correction here at the end of October, then we're in a bull market again, the IWM's in another bear market, now it's in a bull market, all that. But really all that's going on is there has been this market that has needed to go sideways for basically a couple of years now because it's had to digest just all of the COVID stimulus that probably fast forwarded this market. And, I'm sure if you looked at like a monthly chart, which I actually don't have on here, and really scrolled all the way out, it's been a big move over the course of a lot of years here. To me, I actually think it makes sense that we stay broadly big picture range bound. The theme of the market the last couple of years has been whenever everybody starts getting super bearish, that's when we're having those big bounces. When everybody starts getting super bullish, that's when the market begins to deteriorate. It seems like once we get through one thing, we run into the next. Like once we're getting through inflation, we run into the recession or whatever. So I'm still kind of the opinion that this market's going to have some difficulty really getting ahead of itself to the upside here. But I'm not going to predict a 40% pull down in the market either. Staying somewhere within, and I know it's a very big range, but staying somewhere within the 2022 to 2023 range, maybe we break up and make new highs a little bit, makes a lot of sense to me. And we'll take it from there, I guess. I'm seeing Josh out of the corner of my eye saying he thinks 2.5% down from here, and then we resume up. That's very specific. Funny, I'm actually looking for a bigger pullback in the market. But usually I'm the bull and Josh is the bear. I'm looking for a bigger pullback from the market, just not yet. I don't think we're quite there yet. And I think that the more up we go before that pullback happens, that the deeper the pullback itself actually will be. But yeah, we'll see. Always hard to say. The idea of rotating into value certainly makes sense to me in the beginning of the year also. It's certainly what we saw a lot of. The IWM names are still relatively cheap on a fundamental basis. The Magnificent Seven names are relatively expensive on a fundamental basis, I guess. Though you could make an argument based on interest rates that it should be that way, which is an argument that I actually have made in the past. So we'll see. Maybe the market's efficient. Thanks for the question, Robert. From Gabriel. Hi, Dio. Do you like home builders? Lennar. PHM. Well, Lennar looks great. I mean, these names have also benefited a little bit from the improving interest rate situation recently. There's a lot of need for these home builders to work. I've always struggled trading these names, to be totally honest with you. I've always really struggled trading some of these names. And it's crazy, like if you asked me a year ago, or I don't know, over a year ago, if you were like, hey, mortgage rates are going to go to 8% and the home builders are going to be the biggest leaders out there, like, what are you talking about? That doesn't make any logical sense. Yet here we are, right? And I know that now mortgages have come down a little bit, but home builders have been able to outperform, and there's obviously reasons for that. In some ways, new builds have been the best way to go. So the charts still look great. for these things, and the trend is your friend. But I've always found them difficult to trade. Appreciate the question, Gabriel. All right, well, looks like I got through all the questions. I got a lot of unpacking to do. I got in late last night, and I followed my rule. I have this rule of traveling where I always set up my computer the night before. And if I don't do it, it's always a disaster in the morning. So I got in late last night after a lot of driving and set up my computer and then went to bed. But I got some chores to do around here. So it's great seeing everybody. I'm pumped for the new year. Hope you guys are pumped too. There's going to be a lot of opportunity out there. Have a great night. I'll see you all tomorrow morning.